markets. Record territory once again. The Dow Industrial set to open at an all-time high once again this morning. And we know this because it is up about 45 points, just shy of 22,000. But last night, Apple came out with much better than expected numbers. We came within 10 points of 22,000 yesterday, but this is what's going to help us cross it today. Apple is up 6% right now. The company reported better than expected earnings last night. The stock rallying on the news, and joining us right now to talk more about it is Canaccord Genuity Chief Market Strategist, Senior Managing Director, Tony Dwyer. Tony, good to see you. Thanks so much for joining us.
Great to see you, Maria.
Well, you were pretty bullish the last time you joined us and said put money into this market now, so thanks for that. You were right. We're about to hit all-time highs once again.
This too shall pass, Maria.
Would you do it again? Are things getting, how do you see it?
I see a little bit of a correction. Kevin and I were having a great conversation about volatility and low volatility, but it's funny because we're all looking for a correction.
Share that. That was in the green room. We didn't hear it.
Well, what's interesting is historically volatility is very low, and people look at that like it's a sell signal, but it's not. When it gets this low and stays this low for this long, it's actually a buy signal. It lasts a lot longer. So when you look for a correction, you have to identify what really causes a major correction, because that's the current fear. And what it is you have to have a recession to want to be a significant and sustainable seller of equities. The only thing that creates that is a negative credit environment, and we are so far from a negative credit environment at this point that all you're saying is the market can correct because it's too good.
Yeah.
Ultimately, the fundamentals, the market, going back to earnings, the market correlates with the direction of earnings, full stop.
Yeah, they're talking about earnings being up 11% this quarter, Dagan.
Right, which is a major surprise to the upside in terms of growth rate. The first time we've had two back-to-back quarters of double-digit earnings growth in 6 years. It's been 2011 since then. And just yesterday, because I'm a nerd, I was paying attention to the inflation indicator, the personal consumption expenditures that came out with personal income and spending up 1.4% year over year. Incredibly low inflation, which again gives the Federal Reserve at least a little bit of wiggle room in raising interest rates.
Dagan, it's such a good point, because it creates the length of the credit cycle. And ultimately, you have to invert the yield curve. And for the viewers, that's when short-term interest rates are higher than long-term interest rates, which shuts down lending. You have to have an inversion of the yield curve to go into recession. It's not anywhere near an inversion. And here's an interesting stat on earnings.
It has gotten flat, though, which has worried market participants.
Correct. And the best part, Kevin, going back to our volatility comment, when you go from where it is now to inversion, it's a buy signal. You can have a correction, but if you look at the last two cycles, from the point where you went from 100 basis points on the 210 spread to the inversion, the market's been up both times significantly. From the inversion to the bull market peak, it's been up even more. So
I think one of the things we're missing in this narrative is that we have to go back to the Federal Reserve, and because of their lower for longer policy, I mean, this recent rally was kicked off by Janet Yellen saying rates aren't going to get anywhere near historical levels, and so that means earnings are worth more. So that's why you have Apple trading at 15 to 18 times earnings as opposed to 12 to 15 times earnings. Their multiple has expanded. And so you can't give credit to this administration for the market highs. You actually have to give credit to where credit's due, and that's the Federal Reserve. Their low interest rate policy, you can see the dollar was down 6% in the beginning of the year. You can see that technology is leading the way. 47% of the revenues are overseas.
Right.
Yeah.
The economy is getting better globally, not domestically.
Well, if you take GE out of it, just for a quick
GE.
second, Maria, if you take GE out of it, the drop in GE earnings this quarter, the number would actually be closer to 13% earnings, Dagan.
Wow.
So you're at one stock is having that dramatic
GE
an
took
impact.
it down that way.
Yeah, they're down
That's
46% from a year ago.
Apple had some good stuff to talk about. The technology giant beat expectations. Revenue, $45.4 billion. Earnings per share, $1.67. Better than expected on both fronts. During the company's earnings call, CEO Tim Cook dodged a question about whether Apple plans to build 3 big, beautiful plants in the U.S., as Donald Trump has told us. The president recounted to the Wall Street Journal that last week. Cook said the company would have some things we'll say about that later in the year. So we're waiting on that. But look, cash increased in the quarter, so they've got all that cash overseas. 11.4 million iPads were shipped. iPhones, also 41 million iPhones. Good quarter?
It was a great. I mean, it was a great quarter.
Better than you thought?
It's better than we thought. We raised our estimates at Canaccord today. Mike Walkley, the analyst, everybody's raising them.
Yeah.
If you're worried about the economy, Apple is telling you the economy is okay.
And you're saying it's only trading at 15 to 17 times earnings?
Yeah, so
Not
here's
bad.
so what's happening with Apple is that their core focus is on China. You saw Tim Cook capitulate to the Chinese government about encryption, and this says something because Tim Cook has said 6 quarters ago that he's focused on the Chinese consumer because there's going to be more Chinese consumers in the middle class than there is the population of the United States. So they have to go over there and get their sales. They've fallen in China. Revenues were down 14% over there because China is focused on applications, WeChat. They're not focused on the hardware. So they need income and they need wealth to be created in China for people to spend a lot of money on these phones, and they're not doing it. And so the problem is, you look at these revenue numbers from Apple, this isn't their peak revenues. Actually, these revenues are lower than they've had in the past. So everyone's focused on the upgrade cycle. They're going to need to deliver because their expectations for the fourth quarter are high because they guided everybody there. So they need to deliver in the third and fourth quarter to justify this valuation.
But they delivered in what is typically their weakest quarter. And revenue was up. They had the best growth in revenue in 7 quarters. And they actually are selling more iPads and more Macs. And the iPad sales were, let me point this out, Mac sales were up almost 7%, 6.7%. For the first time in 14 quarters, iPad shipments increased.
So that was a surprise.
Yeah, it was a huge surprise. Shipments were up 15%. Because they're selling to schools and businesses. So I think that shows that they're still, we always focus so much on the iPhone. Shipments there were up slightly, up 1.6%, which is decent considering you're moving into the quarter before the upgrade cycle, before they roll out the new iPhone. But the fact that they're finding areas where they can sell the iPad, which many people had written off.
Well, real quick, the reason that's important is because they built this ecosystem. Everybody's focused on their services business. So if you have an iPhone, you're going to, because you're built into that ecosystem, because you're built into the services, the Apple Music, the Apple TV, everything, you want to then get an iPad. You want to get a MacBook as opposed to anything else because you're built into their system.
Do we need to see legislation come out of Washington to see this market hold on to the gains? Dagan, you pointed out to a headline in the Washington Post earlier this morning that was somewhat troubling.
So, because GOP, the headline
I don't know if I believe it, but let's
GOP tax package may be delayed. So, and Lonnie can speak to this.
Says the Washington Post.
Are we surprised, though?
Says the Washington Post.
Right, but I mean, are we surprised by this? What I wonder is how much of this that we're seeing in the market is driven by the assumption that stuff's going to happen. You talk about Apple, one of those companies that got a ton of money parked overseas. One of the biggest premises of corporate tax reform is let's figure out a way to bring that money back, right? Let's figure out.
Well, $50 billion overseas.
This is such an important
question. Going to happen or not?
I love this question because it goes to something we were talking about earlier. The market is not up because of fiscal change expectation. It is, every time I give a talk to a client or a group of people, I ask them the question, would you like more regulation and would you like more taxes? And I've yet to see a hand go up. The animal spirits are not about the president right now. The animal spirits are about you're not going to have increased regulation, you're not going to have increased taxes. So if you actually get tax cuts,
right.